On the program today, Rwanda's GDP slumps by 12% in second quarter as COVID-19 is blamed. Uganda opens airport and land borders after 6-month closure. And Food and Agricultural Organization launches Green Cities Initiative to help transform agri-food. Hello and welcome. This is Business Incorporated on Channels Television. I'm Chimizi Obi Iwagu. Let's get the show started with data from major markets here in Africa, which were mostly negative. South Africa's JSE index shaved off 2.71%, while Nigeria's main index was unchanged. In Egypt, the main index declined 0.15% at intraday. Kenya closed positive on Friday. In the Middle East, sentiments were negative at intraday as all the major markets were deep in the red. Dubai's main index declined the most by 2.16%, while Abu Dhabi's index lost 1.19%. Elsewhere in the region, the Qatari index was lower by 1.53%, while Saudi Arabia's index trimmed 0.36%. And in Europe, stocks retreated in early trade as allegations surrounding bank dealings and rising coronavirus infections weighed on market sentiment around the world. Let's bring in Chelsea now to tell us more. Hello, Chelsea. Good afternoon. Good to see you again. A beautiful week. Well, a massive trove of leaked documents shows how global banks have facilitated $2 trillion in money laundering for criminals, drug lords, and terrorists around the world. Walk us through these reports.
So this is really an unprecedented leak of information. It's coming from about 2,000 so-called suspicious activity reports filed by banks themselves to a division of the U.S. Treasury. And this is basically banks looking at their own clients, looking at their own transactions and saying, this looks like it could be related to money laundering. But what's really striking about this information is that banks, even when they have these suspicions, continue to go forward with these trades. So they may think that it somehow is related to money laundering, but they continue to do it anyways. So that's certainly a big shock from today's information. But it also just shows how wide scale this practice really is. The $2 trillion, these 2,000 reports are really only a sliver of the activity reported over the past couple of years. And some banks are really seeming to have a wide scale practice of really turning a blind eye to concerns over money laundering. So it certainly is raising a lot of questions today.
And Germany's Deutsche Bank is at the center of the scandal and was reportedly involved in 60% of the transactions. What went wrong at Deutsche Bank?
Deutsche Bank is definitely finding itself at this. Certainly finding itself at the center of the scandal today. Deutsche Bank has had a long history of being involved in financial scandals. It had seemingly put some of those behind it, but the trove of information today really raises a lot of new questions about procedures at Deutsche Bank. A lot of the reports were related to its business in Russia, and Deutsche Bank has been under a lot of scrutiny over potentially being used as a vehicle for money laundering in Russia. But what the reports show is that Deutsche Bank and its Moscow office really didn't even follow the most basic anti-money laundering procedures. So it didn't, for example, have information on many of its clients. It didn't have their addresses. In some cases, they didn't know who was owning the company that they were executing a transaction for. So some really basic failures there. And as well, these reports show that these concerns were elevated to the highest levels at Deutsche Bank. Even the chairman of the board during this period had been alerted to it, and nobody really took action. So for Deutsche Bank, that certainly opens the bank up to more regulatory scrutiny going forward, and we're certainly seeing that reflected in the stock price today. It's fallen about 8%, so investors are clearly spooked that this is going to open up a new set of investigations into the bank.
So why haven't regulators stopped these activities?
It's certainly one of the big questions because this data, these reports that the banks are filing, they do go into this centralized database that should be accessible to regulators. I mean, one potential reason is that regulators have had to cut staff in recent years, so they haven't had really enough people to be carrying out enough investigations. But we've also seen in the past several years, regulators really step back from very harsh penalties for banks. So, for example, after the financial crisis or some of the scandals we've seen since then, a lot of regulators, instead of, for example, arresting somebody involved in something like this or prosecuting them criminally, will just hand down some sort of fine and tell the bank to fix what had gone wrong. And this doesn't appear to be really deterring the banks from participating in this kind of behavior. So one of the big discussions today is, of course, of how regulators can be stricter, how they can play a stronger role in deterring this behavior, because it is being used really for very bad activities, everything from drug smuggling to terrorism, and that really should encourage regulators and banks themselves to really clean up their act here.
Well, I guess this report will form discussions for the better part of this week. We'll continue to follow up on that development. Thank you very much, Chelsea. Meanwhile, the UK could be headed for a second shorter mini lockdown for 2 weeks to counter a resurgence in coronavirus cases, with other measures including a 10 p.m. curfew and fines for failing to self-isolate, a possibility. For more from London, we have Juliana. Hello, Juliana. Good afternoon. Well, the government's chief medical advisor, Professor Chris Whitty, believes the country is at a critical point in the coronavirus pandemic and heading in the wrong direction. He had a televised briefing today. What more did he say? Will the country go on another lockdown as being envisaged, and does it worry markets?
Well, it's likely we are going to go into another lockdown. We're not sure yet when, but it's a pretty abysmal day here in London in terms of trading. The markets are experiencing their worst day in months. The FTSE All-Share is down 3.54%. The FTSE 100 is down by 3.49%, and the FTSE 250 is down by 4%. In currencies, the pound is also down on the US dollar by 0.48%. Down on the euro by 0.02% and down on the Japanese yen by 1.01%. As you said, about an hour ago, there was a televised address by the two chief scientific and health advisors here in England. And they really have been saying what we know is that cases of positive COVID infections here in Britain are doubling every day. They say if we follow the trajectory, by this time next month, there will be 50,000 cases a day and potentially 200 deaths, and a further month we'll see about 200,000 cases a day, and we could be at a peak that we haven't seen since April. This has of course spooked the markets, which is why it's down by triple digits. And we are expecting a number of things, as you mentioned, the curfew. We're also some are anticipating that pubs, bars and restaurants will be asked to close again. At the moment we're dealing with a rule of 6 here in the UK, so you can mix with other households. We're expecting that will be changed. We were told that Prime Minister Boris Johnson will address the nation today. I believe Downing Street have put out an announcement as saying that he will have an announcement tomorrow. But so far, we are certainly anticipating a second lockdown, and potentially this weekend pubs will be closed.
We'll keep our ears open. Well, talking about the market, what is the latest on banking stocks after HSBC and Standard Chartered shares tumbled on reports they moved suspicious funds?
Well, yeah, I heard you discuss this quite extensively with Chelsea and Frankfurt, and I'll just really add to that. As you said, HSBC have been caught up in these new allegations suggesting that the bank, as well as other banks, are involved in moving illicit funds for several years. For HSBC, not great. Since the start of this year, their market value has already dropped a whopping 50%. And as soon as this report was out this morning, their shares dropped by about 5.6%, despite the red flags under this SARS grouping. Their alleged to have moved about £62 million to two accounts in Hong Kong between 2013 and 2014. HSBC haven't replied or given any comment yet. We have heard from Stanchart. Stanchart, as soon as they were caught up in these allegations this morning, their shares, I believe, fell about 6%. They said that we take it extremely seriously and it's our responsibility to fight financial crime, and they believe that they have complied. Barclays also suggested the same thing. I suppose the reason why a lot of people are focusing on HSBC is because they have been caught up in a series of issues. First of all, their market value dropped just because of their location and the fact that Asia is their biggest market. All of those riots, really, a lot of people lost confidence in them, and then they got caught up in the geopolitical spat between US, China and Britain. So this is not a great day. It would have been a big story, but of course the world is fighting a larger story, which is COVID.
Absolutely. Anyway, away from the markets, the UK government is ending the rail franchise system in the biggest shake-up of the industry in 25 years. Give us more insight on this.
Well, some will say it's a big shake-up. According to Labour and the union bosses, this isn't really going far enough. Our viewers may or may not know, but Britain's railways have been privatised. They were privatised in the mid-90s. So if you were a private company, you could basically put a bid to the British government and you would be able to run that train line system. But over the past couple of years, the privatised rails have been dodged with a series of allegations from customers. They've not been happy with the way rail fares have been hiked up in a series of years. Also timetables. If you're living outside London and your train is late 40 minutes, of course, that's going to cost you your working day, and also with the weather. So there have been a series of complaints, and there have been calls for the railway to go back into the public sector. The COVID-19 pandemic happened and the number of rail passengers plummeted by about 95%. So the British government had to step in. They stepped in with a rescue deal worth about £3.5 billion. Now, that expired on Sunday, but the Department for Transport have said that they are going to continue funding the railway. And by doing so, they kind of have stopped the privatisation of railways. But it's all really but in name. So they are going to be paying some of these privatised rail lines a significant amount of what they have lost, and they will be taking greater ownership. Well, the British government will be taking greater ownership of the railways, but stopping short of completely taking away the privatisation. So it's a great scandalous headline there by The Guardian. But nonetheless, the privatisation will still be continuing, but the British government will have more of a hand involved in how the railways are run.
Well, it seems the week looks very busy. The world of business will continue to track those developments there. Thank you, Juliana. And major Asia Pacific markets were lower today, with Hong Kong Hang Seng Index leading losses, falling more than 1.5% as of its final hour of trading. Mainland China's stocks saw losses on the day. The Shanghai Composite was down 0.63%, while the Shenzhen Component dipped 0.722%. China's 1-year and 5-year loan prime rate were kept unchanged at 3.85%. South Korea's Kospi slipped 0.95%. Over in Australia, the S&P ASX 200 shed 0.71%. Overall, the MSCI Asia ex-Japan Index dipped 0.65%. And U.S. stock futures fell sharply early today as uncertainty over the future of the U.S. Supreme Court and the possibility of additional stimulus rattled investors. Dow Jones Industrial Average futures indicated an opening drop of more than 500 points. S&P 500 futures and Nasdaq 100 futures were also solidly in the red. The S&P 500, Dow Jones Industrial Average and Nasdaq Composite all fell for a third straight week that marks the market's longest weekly slide since 2019. When we come back after the break, we'll turn our focus on Côte d'Ivoire and, of course, other story on the board. Just stay with us. Right, turning to Côte d'Ivoire, about a dozen people have been killed and scores injured since Ouattara, 78 last month, announced he will be running again. He won the approval of the Constitutional Council on September 14, but his critics maintain Ivorian law only allows 2 presidential terms. His supporters argue that a new constitution adopted in 2016 resets the clock. It's the biggest test of stability for the world's top cocoa producer since Ouattara took office in 2011 following a violent standoff with former President Laurent Gbagbo, who refused to accept defeat in a presidential vote 5 months earlier. Let's talk more about this with Matt Keniger, Associate Practice Lead, Sub-Saharan Africa at Docker Frontier, London. Hello, Matt. Good afternoon.
Hello, good afternoon.
Now, given Cote d'Ivoire's history of problematic transitions of power, why is the Constitutional Council's ruling to allow Mr. Ouattara to run for re-election so significant?
Yes, well, it is very significant. As you say, Cote d'Ivoire has a very short history when it comes to transitions of power. It has had very few peaceful transitions of power since independence. And effectively what this Constitutional Council ruling does is it allows Mr. Ouattara to succeed in arguing that the Constitution in 2016 has reset term limits. Now, this is significant because this raises the political temperature in Cote d'Ivoire, and this is for a number of reasons. One is that it's very late in the day. The election is less than 6 weeks away, and it comes 2 months after the death of his former chosen successor, the late Mr. Koulibaly. And it also hastens the decline in the alliances that Mr. Ouattara formed ahead of the last election in about 5 years ago. And so what this all means is that Mr. Ouattara is trying to hold on to power in our view, and also it reduces the likelihood of his re-election because he's increasingly alienating those alliances that he once relied upon.
Now, the question on the minds of a lot of people is whether the country will return to civil war if the election is marred by violence or is disputed. How likely do you think this is?
So, I mean, this is a very big question that a lot of people ask because of Cote d'Ivoire's history, especially after the 2010 election. And now our view is that a full-blown civil war is unlikely, and this is for a couple of reasons. One is that there has been quite significant constitutional reforms since the last election. We've also seen quite a steady improvement in the economic environment in Cote d'Ivoire. So one of the major drivers of the civil war last time was a very weak economy. However, we do see an increased likelihood of a longer period of political violence, both before the election but also the months after the election. So although we don't expect another civil war, we do expect there to be more political violence and some instability after the election.
Now, let's look at the economy. Generally, we've seen growth rates across West Africa plummet as a result of the pandemic and global economic slowdown. How has Cote d'Ivoire performed compared to the countries in the region, and how quickly can businesses expect the economy to recover?
Yes, I mean, it's a great question to ask because a lot of attention has been given to South Africa and Nigeria and a few other large markets across Sub-Saharan Africa. But Cote d'Ivoire certainly has been affected negatively by the pandemic and the slowdown. And we are expecting weak growth this year, so about 1 or 2% this year. However, we don't expect the economy to fall into recession, which is pretty good news for the economy. And we are expecting to see a fairly robust recovery next year, especially if there is a relatively peaceful transition during the election. So next year we are expecting growth of around about 7%, and this will mainly be driven by pretty healthy government finances, a return to growth for exports, as well as quite a healthy pro-business investment environment. So generally quite difficult this year, but quite optimistic for 2021.
Now, amid the coronavirus and rising political tensions domestically, plans to replace the CFA franc with a new eco currency in 2020 seem to have gone quiet. How likely is it that Cote d'Ivoire and other West African states will see the introduction of the new currency before the end of the year?
Yes, so this was the big plan for 2020 for Cote d'Ivoire and other CFA franc member states. To replace the CFA franc with the new currency, the eco currency. But really, given the, as you said, the domestic political instability or uncertainty, the election that's coming up in a few weeks' time, and the fact that most most governments across West Africa, in those countries that use the CFA franc, are more preoccupied with the economic fallout from the pandemic. We really don't see the ECHO being introduced this year. So although the direction of travel is towards phasing out the CFA franc, it probably will be in 2021 or maybe the year after that. So still definitely a lot more work to be done.
Thanks, Matt, for your time. Matt Kindiger is the Associate Practice Lead, Sub-Saharan Africa at Docker Frontier in London. Rwanda's GDP slumped by 12.4% in the second quarter of the year. The National Institute of Statistics of Rwanda attributes the slump to measures in place to contain the spread of COVID-19. The statistics body says that in second quarter of 2020, GDP at current market price was estimated at 2.1 Rwandan franc, down from 2.3 billion Rwandan franc in second quarter of 2019. In May, global trade was predicted to decline by a record 27% in the second quarter of 2020, adding to a 3% decline in the first quarter of the year. Industry and services were the worst hit, recording a decrease of 19% and 16% each. Financial services dropped by 8%, transport by 41%, while wholesale and trade decreased by 22%. On a bright note, health services increased by 5%, while information and communication activities rose by 33%. Mainly boosted by telecommunication activities, since a huge part of people's lifestyle became virtual. And Uganda has announced that the country's international airport and land borders will reopen and resume operations for tourists after a more than 6-month closure as part of measures against the spread of COVID-19. President Yoweri Museveni's announcement came during his 20th address to the nation on government measures to contain the virus's spread in the country. The president also said any passengers arriving in Uganda must be in possession of a negative COVID-19 PCR test result from an accredited laboratory in the country of origin. The tests should have been conducted within the last 72 hours before the scheduled departure from the country of origin. Returning Ugandans with negative PCR results will be allowed to go home, and the health ministry will only get their addresses for follow-up. The president also announced that schools are allowed to partially open for candidate classes next month, while places of worship should open with strict standard operating procedure. And the United Nations Food and Agricultural Organization, FAO, has unveiled its new Green Cities Initiative and Action Plan to help transform agri-food systems, end hunger, and improve nutrition in and around the cities in a post-COVID-19 era. The launch took place at a virtual event entitled Green Cities to Build Back Better for SDGs, a new powerful venture hosted by FAO during the 75th session of the UN General Assembly, highlighting the vast potential of cities in reducing the impacts of the COVID-19 pandemic on people's health and food security and contributing to climate change mitigation. FAO Director General encouraged all partners to appreciate the essential role of cities in building back better and urgency of innovative, comprehensive and coordinated action. FAO Green Cities Initiative aims to improve the livelihoods and well-being of urban and peri-urban populations in at least 100 cities, 15 metropolitan, 40 intermediary and 45 small cities around the world in the next 3 years, looking to have 1,000 cities joined by 2030. And that's a wrap on the program. Thank you for watching. I'm Chimezi Obi Iwagu.